Bangalore whose tests are showing positive and they can't trace the people. They've given wrong names and addresses.
Yes.
Wrong contacts.
And a lot of the positive people who were in hospitals left the hospitals too. And they can't trace.
Therefore, I think Bangalore is still on the way up, or do you think it's
way up, I think.
Good morning, Vikram.
Morning. Hey, Sanjay.
Good morning, everybody. Vinayak here.
Hi, good morning.
Morning, Vinayak. Morning, Vikram.
Ajay, good morning, Ajay.
Good morning.
You're on mute.
Hi, CB.
Hi, good morning. Good morning. Hi.
Morning.
Good morning.
welcome?
निखिल भाई क्या हाल है?
To welcome Nikhil Meswani, the new National Council member.
Thank you. Good day. Thank you so much. My pleasure.
I also see Ajay. Hi, Ajay.
Hi.
Hi.
Hi, everyone.
Good morning, Shobna. Hi, Ajay Bhaiya.
Hi, Shobna. निखिल भाई क्या हाल है?
All well. Thank you.
Kamal, how are you?
The panelist.
Cyril Bhai, how are you?
Good morning. All well.
Uday Bhai, good morning.
Good morning, and I welcome all the new MC and National Council members, Nikhil, Cyril, and others who are here on this call. A very warm welcome on behalf of CII.
Thank you very much. Looking forward to working under your leadership.
Thank you, Nikhil.
Morning, Mr. President. DG Ashok here.
Yes, Ashok.
How are you, sir?
Fine, thank you.
Good morning, Vishakha here.
Yeah, okay. I think if you need to mute all before RBI governor joins, I leave
to mute all
of the mics with your IT team, Chandrajit.
We are muting all. We are muting all.
Should I call her to come? Still there are some, somebody joining. Some disturbances are coming. Can we mute everyone? Yes. Yes.
Good morning, Chandrajit and Uday. Just to tell you, Sunita Reddy here. I'm going to mute.
Yeah.
Good morning.
Good morning. Morning.
Good morning. I am audible.
Yes.
Namaskar.
Namaskar. Perfectly on time. Very much.
Yeah.
We know that we have limited time, so with your permission, if we could begin.
Please go ahead.
Thank you very much. So welcome everyone to this very important session with the Governor RBI. And this is indeed a very, very special session. Welcome very much the Honorable Governor, Mr. Shaktikanta Das. Thank you for sparing time and agreeing to be with the CII National Council. And especially during these times, the challenging times that the industry is living on. And also very happy to mention that this is a very special event from the point of view that this is a CII's 125th year, and yours, the collaboration, cooperation with CII is indeed, so for you to be on a CII platform on the 125th year is of great value and encouragement to us all. Sir, just wanted to mention to you, Governor, that we have 150 odd participants who would join from the CII's National Council, and these are members from all over the country and from all different sectors of the industry who are here with us today. And we would, of course, have after your address some question answers that you have very kindly agreed to take from the membership of CII. And I also wanted to mention to all of us that please do keep yourselves on mute. Otherwise, we will have a clash of unnecessary clashes on the system. And we'd also like to mention that this is a session which is live and live on the television and open to the media, and we have friends from the media also attending that. With that, Honorable Governor, would once again like to welcome you to this session and thank you very much for joining. And I'd like to request Mr. Uday Kotak, the CII President, to give his opening remarks. Uday.
Okay. Good morning, Governor, and on behalf of CII,
Good morning.
It
has frozen.
Yeah, you are fine. We can hear you.
Yeah, you can see me?
Yes.
Okay. Good morning, Governor. On behalf of CII, a very warm welcome.
No, it's okay.
Can you see me and hear me?
Good morning. Yeah. Yeah,
morning,
I think little louder, please. It's very feeble.
Yeah. Okay. Good morning, Governor. And on behalf of CII, a warm welcome to you in the presence of our National Council and members of the National Council. I would first like to compliment the RBI under your leadership for extremely proactive actions taken in the recent times, particularly starting from end of March. And the speed of response of the RBI has been quite amazing in the context of an unprecedented crisis which the world is in the COVID era. The different phrases have been used for the post-COVID world. People have talked about a new normal. That I would believe that we are moving into a world which can be defined as never normal, a constantly changing world where the definition of normal itself is undergoing a change. And therefore, the challenges to both policymakers and practitioners in this new world are enormous. And in that context, sir, the role of the central bank, both locally and in India, has been up for serious discussion and debate in recent times. And in these new normal or never normal times, the question is, what is the areas of responsibility of the different actors in an economy, and particularly on the front of fiscal policy and monetary policy? And how do we look at the lines, particularly in a crisis situation in the COVID era? Therefore, traditional rules and norms, which may have worked for normal times, need to undergo a different perspective. And on behalf of CII, we believe that greater coordination between the monetary and the fiscal policy are crucial at times like these. In the recent report of the RBI on financial stability, there has been a prediction of a sharp jump in NPAs of the financial sector to somewhere between 11 to 15% for the year ended March 21. Keeping this in mind, and at the same time, India's aspiration for a $5 trillion economy, what it means is the level of capital required for, number one, COVID-related stress, and number two, aspiration of a 5 trillion economy would need capital in the financial sector, where estimates vary, but close to doubling the present capital of additional capital of around 10 lakh crores. At a time like this, sir, on behalf of CII and all of us, the principle has to be India first and India above everything else. And therefore, the financial sector should not be thinking about ownership, whether it's public or private, but should have a view which is much more ownership neutral on an India first platform. In addition, the priorities for getting to a 5 trillion economy in a post-COVID world would also require very high focus on three specific sectors: infrastructure, agriculture, and micro and small enterprises. And we therefore need to see how both business industry on one hand and policy on the other work together to achieve getting out of the economic challenges coming from COVID and continuing with our dream of a $5 trillion economy. Some specific requests have come from our members, which I wanted to highlight to you. Number one is there is a growing view across the membership of a need for a one-time restructuring. And I just wanted to present this to you as a broader request across the membership of CII as well. In addition to that, sir, you have done very significant proactive steps to liquidity. And the view is a continuing ease on liquidity is also important through this very difficult phase for Indian industry as we go forward. The theme at CII, sir, we have focused on is lives and livelihoods. And in that context, we do believe that there is a time for us to work closely with you as we go through this and navigate through this never normal phase of the Indian economy. With that, sir, I would request you to share with us and address our colleagues in the National Council. And we are really grateful to you for spending time and being open to also taking questions and answers. May I request now the mic over to you, Mr. Shaktikanta Das, Governor, Reserve Bank of India.
Thank you, Uday, and thank you, Chandrajit, for all those welcome and the opening remarks. Now, I would like to, it's really good to see so many known faces on the screen. And I'm sure there are others also whom I'm not able to see on the screen, but they're there. So good to see you all in the CII. And my interaction or association with CII goes back almost 30 years. I think back to 1991 onwards. And so a lot of interaction with all your members in Chennai, Delhi, Mumbai, and other places. Now, thank you for having me in this interaction with the members of the National Council of the CII. And I'm very happy to note that the CII, and it's very imaginative thought on the part of CII, which has realigned its functioning and thought processes around a new theme for 2021. And the new theme, as all you have pointed out today, is building India for new world lives, livelihood, and growth. And this is happening under the able and visionary leadership of Shri Uday Kotak, Shri Narendran, Shri Sanjeev Bajaj, Shri Chandrajit Banerjee, and all the eminent members of the CII National Council and other members. Now, currently, COVID is a compelling theme in all conversations. Questions abound about flattening of the COVID curve, arrival of the elusive vaccine, protection of lives and livelihood, and the shape of the economic recovery. These questions haunt us daily and day in and day out. There are no credible answers as yet. The only thing that is certain for now is that we must fight on relentlessly against this invisible enemy and eventually win. Today, I thought I should move away from this preoccupation with the uncertain present and reflect on some dynamic shifts that are underway in the Indian economy. They may escape our attention in this all-consuming engrossment with the pandemic, but they could be nurturing the potential to repair, to rebuild, and to renew our tryst with developmental aspirations. These dynamic shifts have been taking place incipiently for some time. In order to recognize and evaluate these shifts for their potential in shaping our future, one needs to step back a bit and take a more medium-term perspective. In my address today, therefore, I propose to touch upon five such major dynamic shifts which are underway in the Indian economy. First, the fortunes shifting in the favor of the farm sector in our economy. Second, changing energy mix in favor of renewables. Third, leveraging information and communication technology, that is ICT, and startups to power growth. Fourth, shifts in supply and value chains, both domestic and global. And fifth, infrastructure as the force multiplier for growth. First, let me highlight on the fortunes shifting in favor of the farm sector in our economy. Indian agriculture has witnessed a distinct transformation. Last year the country recorded, there was a record production of food grains, record production of cereals, and there was a huge jump in the horticulture production also. Not only that, India has also now emerged as one of the leading producers of milk, cereals, pulses, vegetables, fruits, cotton, sugarcane, fish, poultry, and livestock in the world. Now, under all these categories, there is a lot of statistics about the growth, etc., which I am not reading out, or I'm not going into the statistics, because a copy of my speech will be uploaded in the RBI website. So those of you, who are present here and my friends from the media, they can get it from the RBI website. It will be uploaded after this event is over. Now, these achievements, and in fact, all of you also are aware that the buffer stock currently is about 2.3 times the norm. These achievements represent, in my view, the most vivid silver lining in the current economic environment. Shifting the terms of trade in favor of agriculture is key to sustaining this dynamic change and generating positive supply responses in agriculture. Experience shows that in periods when terms of trade remained favorable to agriculture, the annual average growth in agriculture gross value added, GVA, exceeds 3%, and that's quite high. Hitherto, the main instrument has been minimum support prices, but experience has been that price incentives have been costly, sometimes inefficient, and even distortive. India now has reached a stage in which surplus management has become a major challenge. It's not dealing with, it's no more a question of having self-sufficiency. It's not a question of having enough production to meet the requirements of 1.3 billion people. But I think the major challenge today is surplus management of agricultural produce. We need to move now to policy strategies that ensure a sustained increase in farmers' income alongside reasonable food prices for consumers. An efficient domestic supply chain becomes very critical here. Accordingly, the focus must now turn to capitalizing on the major reforms that are underway to facilitate domestic free trade in agriculture. I am reminded here of the three steps which I would like to mention here, three steps which the government has taken recently. First, the amendment of the Essential Commodities Act. Second, the Farmers Produce Trade and Commerce Ordinance. And third, the Farmers Empowerment and Protection Agreement on Price Assurance and Farm Services Ordinance. Now, all these initiatives have opened up a whole new world of opportunities for industry and businesses. The consequential creation of jobs, augmentation of farmers' income can indeed be enormous. And the benefits, as you are aware, and they have been listed, the benefits of these three initiatives. And in fact, I do see these three initiatives which were pending for a very long time. I do see that an effective implementation of these announcements by the government and an effective capitalization of these opportunities that have been opened up consequent on these reforms. I think these can prove to be game changers in terms of adding value to our economy, in terms of creating jobs and increasing farmers' income. These are opportunities for industry to utilize. The second aspect I wanted to highlight is the changing pattern of energy production in favor of renewables. Now, a similar opportunity space now exists in the energy sector also for industry and business, and this is especially in the area of renewables. India's progress in addressing the demand-supply imbalance in electricity has been remarkable. It has now become a power surplus country exporting to neighboring countries. While demand for electricity grew at an average rate of 3.9% in India during the period 1516 to 1920, supply grew at an average rate of 4.5%, and installed capacity increased at an average of 6.7% during this period from 1516 to 1920. What is particularly striking is the role of renewable energy. The share of renewable energy in overall installed capacity has doubled to 23.4% at the end of March 2020 from 11.8% at the end of March 2015. Now, see the increase that the country has experienced. That is, the share has gone up from 11.8% at which was the figure at the end of March 2015. From 11 point, it has gone up to 23.4, which is almost of the share. And also, I think with this achievement, the country now targets to have 40% of the electricity supply from renewables by the year 2030. And this is an area where I think there are lots of opportunities for industries to invest in solar plants, in wind energy installations, and also to invest and creating domestic capacity in manufacturing and production of solar panels. I think we need to move now to the next stage of investment and manufacturing, having sufficient domestic capacity to manufacture solar panels. And that is something which I think if the authorities and the industry representatives like the members of the CII work together, I think it is something which the country can certainly achieve. A major factor driving this shift in energy mix has been the steep fall in generation cost of renewable energy. As a result, renewable power generation technologies have become least cost option for new capacity creation in almost all parts of the world. The weighted average cost of addition to renewable capacity in India was one of the lowest in the world in 2019. Now, this has started exerting significant downward pressures on spot prices also for electricity. Going forward, this landmark progress could result in a significant overhaul of power sector encompassing deregulation, decentralization, and efficient price discovery. Policy interventions in the form of renewable purchase obligations for DISCOMs, accelerated depreciation benefits, and fiscal incentives such as viability gap funding and interest rate subvention will have to go through a rethink. Reforming retail distribution of electricity is also a compelling necessity. The objective should be to end the cross-subsidization by industry for other sectors and closing the gap between the average cost of supply and the average revenue realized. And they would require they would require focused attention from all authorities concerned. A nationwide grid integration can take supply from renewable sources as and when generated, and that is something which is also necessary. Now, these dynamic shifts in renewables could help increase India's per capita electricity consumption currently among the lowest in the world. Here too, Indian industry has a very crucial role to play. The third area which I want to highlight today is leveraging information and communication technology, ICT, and startups to power growth. ICT has been an engine of India's economic progress for more than 2 decades now. Last year, ICT industry accounted for about 8% of country's GDP and was the largest private sector job creator across both urban and rural areas. In 2019, in 1920, software exports at $93 billion contributed 44% of India's total services exports and financed 51% of India's merchandise trade deficit in the last 5 years. These headline numbers, however, understate the contribution of the sector to the economy. IT has revolutionized work processes across sectors and has generated productivity gains all around. The ICT revolution has placed India on the global map as a competent, reliable, and low-cost supplier of knowledge-based solutions. Indian IT firms are now at the forefront in developing applications using artificial intelligence, machine learning, robotics, and blockchain technology. This has also helped to strengthen India's position as an innovation hub, with several startups attaining unicorn status. India has added 7 new unicorns in 2019, taking the total count to 24, the third largest in the world. The Startup India campaign also recognizes the potential of young entrepreneurs of the country and aims at providing them a conducive ecosystem. According to Taxon database, funding for Indian tech startups touched 16.3 billion US dollar in 2019, and over 40% and this was a 40% increase over the level of previous, which was there in the previous year. Now, while health and fintech are leading segments, entrepreneurs are now leveraging opportunities across sectors and markets and increasing the depth and breadth of this ecosystem. Interestingly, a significant proportion of startups in India are now serving small and medium businesses and low and medium income groups. COVID has impacted the outlook for startups, particularly with regard to availability of funding due to the generalized atmosphere of risk aversion. Even before COVID-19, a global technological churn was underway, with low spending by firms on legacy hardware and software systems. But with rapid advances in digital technologies and computing and analytical capabilities, fierce competition from other developing economies with the potential to provide cost-effective IT services is rapidly emerging as a challenge to India's position as a leading outsourcing hub of the world. Globally, regulatory uncertainty relating to work permits and immigration policies may also amplify the challenges. The sector has also to deal with the concerns relating to privacy and data security. Creative destruction is an integral feature of a robust and dynamic economy. The IT sector is best placed to drive this process and also manage its consequences. There is a significant association between the count of new firms which are born in a district and the gross domestic product of that district. Promotion of young firms, startups will be critical for greater employment generation and higher productivity-led economic growth in India. It would be essential to reorient resources and policy focus in this direction. Innovation and ability to nurture ideas into actualization would be the key challenges. In this context, private enterprise and investment have indeed a game-changing role. The fourth point I wanted to highlight is with regard to shifts in supply and value chains, both domestic and global. In a competitive market economy, an efficient supply chain can enhance economic welfare. Investment in sectors with strong forward and backward linkages in the supply chain can generate higher production, income, and employment. Consequently, identification of such sectors becomes very critical for strategic policy interventions. Stronger intersectoral dependence can help enhance efficiency of the domestic value chains. Strengthening the position of a country in the global value chain, GVC, can help maximize the benefits of openness. GVC, that is global value chain, encompasses the full range of activities starting from conception stage of a product to its designing, production, marketing, distribution, and post-sale support services performed by multiple number of firms. The higher the GVC participation of a country, the greater are the gains from trade, as it allows participating countries to benefit from the comparative advantage of other participating countries in the GVC. More than 2/3 of the world trade indeed occurs through global value chains. The World Bank research findings, however, suggest that India's GDP share, I mean, the various data have shown that India's position and India's share of the global value chain is quite limited, and this needs to change. And according to a World Bank 2020 report, it suggests that 1% increase in GVC participation can boost per capita income levels of a country by more than 1%. And that's not small. This scenario has to change, and I think this is the right time for India to take efforts to become a part of the global value chain. And here the focus and emphasis will have to be on productivity and will have to be on the quality of our products and services, and the speed and the promptness in delivering the in delivering the various orders. Global shifts in GVC in response to COVID-19 and other developments will create opportunities for India. Besides focusing on diversifying sources of imports, it may also be necessary to focus on greater strategic trade integration, including in the form of early completion of bilateral free trade agreements with the US, EU, and the UK. Now I go to the last point which I wanted to highlight, and that's very dear to CII, and this is something which Uday also mentioned in his opening remarks. I look at infrastructure as a force multiplier for growth, and when I say this, it is stating the obvious. In India, the progress made on physical infrastructure in the country in recent years needs to be viewed as no less than a dynamic shift. Road construction, the primary mode of transportation in India, has increased from 17 kilometers per day in 2015-16 to about 29 kilometers per day in the last 2 years. India is the third largest domestic market for civil aviation in the world with 142 airports. And with regard to airport connectivity, India ranked fourth among 141 countries in the Global Competitiveness Report 2019 of the World Economic Forum. I have got similar data about the penetration of internet, about the improvements which we have seen in the functioning of our ports, in railways, the kind of new projects that are being now implemented in the railways. That is there all in the part of my speech, the written text. So if someone is interested, you can have a look at it. So I'm skipping it here. Now, notwithstanding all this progress, the infrastructure gap remains large. According to estimates of Niti Aayog, the country would need around US $4.5 trillion for investment, $5 trillion for investment in infrastructure by 2030. On financing options for infrastructure, we are just recovering from consequences of excessive exposure of banks to infrastructure projects. Non-performing assets, NPAs relating to infrastructure lending by banks, has remained at elevated levels. There is clearly a need for diversifying the financing options. The setting up of the National Investment and Infrastructure Fund, NIIF, in 2015 is a major strategic policy response in this direction. Promotion of the corporate bond market, securitization to enhance market-based solutions to the problem of stressed assets, and Appropriate pricing and collection of user charges should continue to receive, not stimulate, I'm sorry, should continue to receive a priority of policy attention. As in the case of the Golden Quadrilateral, a big push to certain targeted mega infrastructure projects can reignite the economy. This could begin in the form of, and this is a suggestion which I would like to make for consideration, of everybody present here and all authorities. Now, it may look a bit ambitious, but I think if we plan it rightly, I am sure it is achievable. Now, so how do you do this? How do you give a big push to the infrastructure sector, and how do you target all your efforts in this direction? Now, this could begin in the form of a north-south and east-west expressway together with high-speed rail corridors, both of which could generate large forward and backward linkages for several sectors of the economy and regions around the rail and road networks. Now, these are ideas which I'm not by no stretch I'm suggesting that this can happen in the short term. These require a lot of planning, and this can happen in the medium and particularly in the long term. But I think as a country we need to start working on these kind of ideas. I've just given one by way of illustration, but there could be so many other ideas also, and there are other ideas, I'm sure, and I'm aware. Both public and private investment could be key to financing our infrastructure investments. CII has been playing a very important role in infrastructure development in our country, and I look forward to CII to play a very creative role in this regard. In my address today, I have tried to move away from an outlook overcast by the morbidity of the pandemic to one of optimism. These dynamic shifts, which I have highlighted in our economy, need to be converted into structural transformations which yield sizable benefits for our economy and help to position India as a leader in the League of Nations. They involve testing challenges, but also the reaping of significant rewards. Indian industry will have the pivotal role in what could be a silent revolution. Can the CII be its spearhead? I leave you with these ideas and dare you to dream. Thank you. Thank you very much.
Thank you, Governor. Thank you very much. And I must say that we deeply appreciate your vision and insight for building India for a new world, which is the theme of CII, and the approach towards getting constructive progress for India in the medium to long term. With your kind permission, sir, we will now open it up for questions and answers. My colleague Chandrajit will receive the different questions and ask people to speak and ask their questions. May I request each person who is asked the question to be brief and to the point, so that we can have more people have the opportunity of asking the governor questions and his views on different subjects. Chandrajit, would you like to now, many people would have messaged you or requested you, can you now start asking people to have their questions for the governor?
Right. Thank you. Thank you very much, Uday. Thank you very much. And Governor, I just wanted to ask you one thing. Would you like to bunch one or two, three questions together, or would you like to do one-to-one? If we do two to three together, maybe we will get a little bit more time with you.
Yeah, that's fine with me. Please go ahead. That's fine with me. I leave it to you entirely. You are the master of proceedings.
Thank you. Thank you very much. So I'll call upon some of our members who wanted to ask questions, and I'll start with Narendran, TV Narendran, the president designate and the CEO of Tata Steel, to talk on exports. Yes, Narendran.
Yeah, thanks, Ecb. Thanks, Uday. Thank you, Mr. Governor. My question is something which comes to us from our members. This is about the exchange rate, because today the inflation is low. Our foreign reserves are more than $500 billion. Oil prices are quite low. Exports has shown some growth in the last couple of months. You talked of global value chains. So do you see the room for a slightly weaker rupee, and any comments on that?
Thanks, Naren. The next question, I'll come to Sanjeev Bajaj, the Vice President of CII, and to really talk from the financial sector, the NBFC in particular. Sanjeev? Sanjeev, we are not getting your link, so we'll move ahead with a lack of time. I'll come to manufacturing, the manufacturing sector, and really come to Dr. Pawan Goenka, for President of the Mahindras.
Thank you, Chandrajit. Thank you, Governor, for bringing out 5 very important midterm strategies and taking us away from the current COVID-19 mindset. I just wanted to focus on the 4th item that you mentioned, participating in the global value chain, and everybody acknowledged that that's really the right thing to do. But as you said, we have not really succeeded in making an inroad in it. And the reason for that, I believe, is competitiveness of Indian manufactured goods. We all talk about low cost of labor, but we have to be concerned about logistic cost, industrial power cost, cost of money, lack of scale, and sometimes regulations. So the question that I have is that how do we go about and take advantage of the current situation that we have an opportunity to really make a significant advancement in becoming part of global value chain?
Thank you, Dr. Goenka. I'd like to come to the construction sector also, which is one of the stress sectors that we had talked about. Atul Punj, Atul, you're on mute. Please unmute yourself.
Yeah, thank you, Chandrajit. Good to see you again, Governor. The construction sector, infrastructure sector, as you yourself mentioned, has got elevated levels of NPAs. And I'd like to table one of the big concerns that the entire sector really has, is that the lender's liability does not seem to be a factor that is taken into consideration in any calculation. Very often what happens is that banks give a facility to a company. Midway through the rollout of a project or projects, the banks decide to change their mind because they are spooked by either some bad news about the sector, about the particular project, etc., and leave the company high and dry, which then translates into an NPA. So the bank's contribution, and we have senior bankers on this conversation, I think we really need to have a serious look at the role that the banks are playing in pushing companies into an NPA situation and not allowing them an opportunity to really recover. And a large part of the reason of elevated NPAs is cutting short the facilities that were committed to companies midway, or changing the goalposts as they move along, or, for example, using some loophole in the agreement, to wiggle out of a commitment. There is no law, there is no lender's liability, there is no recourse for companies other than to go to the NPA platform, and then the rest is history. I don't want to do that. So that's a major concern that the sector has, both as developers and as construction companies. And lastly, construction companies cannot function without banking support. If you don't get bid bonds, you don't get advance payment guarantees, you don't get performance guarantees, you cannot exist. So it's not possible for any company in the construction space to really exist without banking support. And when banking support is so fickle, it becomes impossible to survive. Thank you.
Thanks. Over to you, Governor.
Well, 3 questions. On the first one, Mr. Narendran, you will agree that no central bank governor will ever mention what should be a level of the rupee. It's, what's a reasonable level for the rupee. And let me mention RBI's policy. And this is, this has been stated earlier also. We have no fixed target so far as the rupee to dollar ratio is concerned. The RBI doesn't have a fixed target. Our policy approach is basically to prevent volatility in the forex market. The exchange rate cannot be very volatile, because if you have a very volatile exchange rate, it's a big problem for both exporters and importers, and for everyone who has a forex, who's a receiver of forex payments, or who's a, who has got forex transactions. So therefore, I will not comment on weaker or stronger rupee. Our effort is to focus on, preventing excessive or preventing the volatility of undue volatility in the currency market. The second point is with regard to the global value chains. I think Pawan Goenka asked that question. Now, this has been really the challenge. I mean, that's why I mentioned that productivity, quality things. I mean, we do recognize as there have been long-standing problems. Now, but so far as I mentioned about the renewable source of energy. Now, let's hope renewables reach 40% of our power requirement, and with the lower tariff that that we expect, that we are getting now under renewables, and with major reforms in the power sector, I think we should be able to move towards a better pricing of power for all segments of the economy, reduce the element of cross subsidization, and make the cost of electricity more competitive for Indian industry, for all manufacturers, and also for other players in the service and other productive sectors. Now, this is an area where both authorities at the central and particularly at the state government level, they will have to work together and ensure that we move away from a system of this is just a thought. I mean, move away from a system of cross subsidization of electricity by industry. We should move towards a regime where if government wants to give a subsidy, then they must give it through DBT directly to the beneficiaries, rather than loading excessive cost on one segment of the economy, which is incidentally, let me point out, it's incidentally and eventually, not incidentally, it is very much, it's eventually not good for the consumer or not good for the, for anyone, for, for the factory worker or for the, the farm sector worker who are working, because when industry becomes expensive, naturally it has got other impact on inflation and creation of jobs, etc. So this is a kind of a long drawn out, I mean, this is an area where we have to, the authorities and the state government, the central government and the industry will have to work together. The ease of doing business has considerably improved. But there are still issues like, the other, some components of the ease of doing business which require immediate attention. And I'm not again revealing any state secret, is to, the enforcement of contracts with regard to property registration, the time taken, and the permission for various construction, etc. So it's a very, there are lots of, I entirely agree with you that we need to become more competitive in terms of cost, efficiency, and it's something where both governments and industry will have to work together. The third point, I think Atul Punj asked about it with regard to construction. I mean, I'm aware that there are, there have been cases, and we do know of specific cases where, the banks have gone back. There have been some instances, but I think you will agree that over the years, such kind of things have improved, and perhaps I have a sense that this was perhaps more rampant in the past, but now I think things have improved. And so far as RBI is concerned, you are very much aware that we have extended the DCCO, the date of completion of commercial operations with regard to the construction sector, with regard to the real estate sector. We have extended it. It was 1 year. We have extended it by 1 more year. Our supervision, Department of Supervision and our supervisors are constantly engaged with the banks and the Indian, as a part of our supervision, we highlight and impress upon the banks through the IBA, and directly also when we meet. Mr. Rajnish Kumar is present here. I'm sure he will give his inputs. So ultimately it boils down to, the kind of, it boils down to the risk aversion, the issue of risk aversion and governance efficiency in banks. So it's a two-way process. Not all blame can be put at the doorsteps of the banks. But it's a two-way process. I think both industry and the banks will have to work together. The industry associations like CII, the Indian Banks Association, I think there needs to be greater interaction to deal with such challenges. From our part, as a central banker, as a regulator, we do deal with such issues, not individual cases. It's not possible for us, and it's not desirable for the regulator to deal with individual cases, but we deal with this as a generalized problem, and we always discuss with the banks and try to improve the functioning wherever they are noticed.
Thank you, Governor. May I now request Mr. Deepak Parekh to ask, and I'm sure he has got some perspective on the real estate sector as well. Deepak bhai?
You're on mute. Yeah, you're on mute.
Deepak bhai?
Yeah.
Governor, we agree with your optimism. I have three small points. One is, please do not extend the moratorium, because we see that even people who have ability to pay, whether it's individuals or corporates, are taking advantage under this moratorium and deferring payment. So there is some talk that there will be another extension of 3 months. It's going to hurt us and hurt the smaller NBFCs particularly. The second point, sir, is that globally, central banks are buying bonds of private sector, junk bonds, commercial paper, while you have taken a stand that we should fund the banks, and the banks will buy all these instruments in the market or from the mutual funds. But the disbursement from these are not that great. And there is reluctance and risk aversion, as you have said yourself, amongst the banks to support smaller and weaker non-bank finance companies or microfinance or housing companies. So I think globally, I think there are a large number of central banks who are directly buying in the market bonds. So the third point, which Uday mentioned, is the most critical one, which is structure. If we put on a look at the future, look at this time next year, if restructuring is not given, the amount of NPAs in your own report is 12.5 in March 2021, or it could even be 14.7. Now, if banks, NBFCs, microfinance, whatever, if they have these kinds of NPAs, the rating of every financial institution will come down. They will not be able to raise money in the market. They will not have access to bank funding, and we will have a major financial crisis on our hands unless we give restructuring. We had done that in 2008. It is worth considering to save future problems. That's the point I was making. Thank you.
Yeah, may I request the Governor to respond to that before we go to the other questions, which CB has a queue of people.
I can see a lot of interest in the suggestions which Mr. Deepak Parekh made. Uday, you have also made. I think, three suggestions, basically. These are not questions. One is with regard to moratorium, then with regard to purchase of corporate bonds and restructuring. And so I have noted the suggestions. I have made a note of the suggestions. I will not be able to comment on any one of them now, but I have made note of your suggestions. And with regard to RBI buying the corporate bonds, you see, as you know, the law doesn't permit currently, but it's not just the question of the law permitting or not permitting. I think, we have to recognize the fact that the liquidity support that we have given through the long-term repo operations, through the targeted TLTRO, that is the targeted long-term repo operations, the issuance of corporate bonds in the first quarter of the current financial year, I think it's about, if I remember the figures correctly, it's almost about 1 lakh crores or so. I'm not able to recollect the exact figure, but it's a record. It's much more than the issuances in the corresponding first quarter of the last year. And the corporate bond market, which appeared to be freezing up sometime in March, I think there is a new life which has been injected into the corporate bond markets. You are right that most of the resources have gone into AAA rated bonds, and they have not really gone into AA and A rated bonds. So precisely for that reason, based on Uday mentioned about coordination between the fiscal and monetary authorities. Now there's a lot of interaction between the RBI and the finance ministry in the government. And because of that, the government has announced the schemes, the first loss guarantee of 20%, then the new SPV they have created, whereby whereby liquidity is now mainly targeted at the lower, at the lower rated bonds, lower meaning lower than AAA. So efforts are being taken, and I see, in fact, I don't have it right away with me, but I do see renewed activity in the, in the bond market, even below the AAA rated markets, and the kind of complaints which one was hearing in the months of, let's say, end February, or particularly in the month of March, I think the position has improved. And I can assure you, and I have said it earlier, that the RBI remains extremely vigilant. We are monitoring the situation, and as and when certain steps are required, we will not hesitate to take those steps. You are aware about the way the RBI intervened when to sort of to provide to support the mutual fund industry, and the RBI will always be proactive, and we are watchful. As and when whatever steps are required, we are prepared to consider them.
Yeah, Governor, you are absolutely right. There is a significant increase in the corporate bond market activity. However, it is still linked to higher rated paper, going down to up to AAA. But below that, I think there is concern on the quality of the paper. And there is also a fundamental issue about the rating process itself. So there are multiple issues, but I will now go back to Chandrajit for the other questions which many members have. Chandrajit, back to you.
Right.
Now,
Thanks.
if I, also I think I must also mention that to be fair to the banks, I think there is an extent up to which they can they can be sort of risk aversion can be the credit risk can be assumed, and the banks will have to evaluate the risks involved in various investments they are making. And I think it's a commercial judgment on the part of the banks and other lending institutions, including NBFCs. So I think we must give them that, liberty to make their own risk assessment and assume credit risk to the extent they feel comfortable. And of course, as I have said in my foreword to the financial stability report, extreme risk aversion also, extreme risk aversion can also be a problem for all. So therefore, the bank should exercise a due diligence, because ultimately what is important is the health of the institution, the health of the bank, the health of the NBFC, and the issue of the aspect of financial stability and stability of financial sector entities is also important.
Thank you. Thank you. Thank you, Governor. We are also actually coming to the near the end of the time, so I'll try and squeeze in 4 this time. Sanjeev Bajaj, Rakesh Mittal, Vinayak Chatterjee, Sunil Munjal. I'm reading out the names so that you are ready. So can I start with Sanjeev? Sanjeev, we'll try you once again. No, Sanjeev, we'll come back. Rakesh Mittal.
Good morning, Governor. I just have to make 2 suggestions on policy matters. The first is the suggestion to relax the ECB guidelines. Currently, the limits are $750 million under the automatic route. If this could be considered to enhance the limit, because given the global liquidity which is available in the markets, it will be good for the corporates to raise loans and borrow money. The second is relaxation of time for FPIs under the VRR route. Currently, they have to retain 75% of the committed portfolio for a minimum period of 3 years. So if the relaxation could be given and mutually investor and borrower can look at shorter duration periods, because this will help the investor and borrower both, but more importantly also for the corporates to refinance the foreign currency loans. And maybe you may consider to start with listed large caps in the beginning. And just a quick last point I want to make is, given the stress in the economy and huge pressure, I believe there will be more companies joining the NPAs, and therefore, I think the moratorium extension should be seriously looked at and considered. Thank you.
Thanks, Vinayak Chatterjee.
Yeah, can you hear me?
Yes.
Okay. Good morning and almost good afternoon, Governor. It's a pleasure to have heard you. I will very quickly focus on your fifth basket, which is the one on infrastructure. In your latest fiscal stability report, you have alluded to the fact that the impact of monetary policies may have plateaued and it is time for government to step up public expenditure to give a revival boost to the economy through large infrastructure and public works programs. So I think you have already kind of alluded to that, and I will just build further by taking up your challenge because you, in your ending remarks, you asked CII to dare to dream. So I want to check two ideas with you, which many of us have been discussing online and offline. The large quantum of investment in infrastructure public works requires a solution out of the box. Right now, most of the conversation is related to the extent that the fiscal deficit will be relaxed or enlarged in the Consolidated Fund of India. But special times require special measures. And in trying to dare to dream in terms of a solution to economic revival, the two ideas that are being discussed is one, a development financial institution for infrastructure, a DFI with maybe a large balance sheet size of 15 to 20 lakh crores dedicated to infrastructure public expenditure. The other is across the economy, out of the box thinking to create a separate box outside the union budget called a National Renewal Fund, supported by RBI in whatever way and shape and manner you people think appropriate, which actually could be a 50-year fund with a capital base of 20-30 lakh crores, which could be redeemed over 50 years, but will be a parallel box to the Consolidated Fund of India. So have there been any engagement between you and the government on these two ideas, a DFI for infrastructure and maybe a National Renewal Fund? I'll stop here, sir.
Thank you. Mr. Sunil Kant Munjal.
Good to see you, Mr. Shaktikanta, and good to see you looking fit and healthy. So just two quick ones. One is a takeoff from what Vinayak is saying. In light of India's large, well, hopefully large forex reserves and India's desire to be a self-reliant nation, do you not think it's time for us to actually set up a sovereign wealth fund kind of an instrument of the kind, let's say, Singapore did, creating GIC and Temasek, one focus on internal investments, one focus on external investments? Because today, not only will you have the money to put in yourself, you will be able to attract significant investments from around the globe. It is clear India will grow, and it is also clear that returns in India are higher than they are in many parts of the world. So it could be very timely at this moment for us to consider that. Second, going back to the financial services industry, while the large banks probably have the wherewithal to last this turbulence, the issue is going to be with small banks, payment banks, NBFCs. Many of them are struggling at this moment. Do you have any plan or any thought at all to providing some support specifically for that sector?
Thank you. I'll just try and fit in one question from a very highly stressed sector, without a doubt, and I'll want to bring in Puneet Chatwal from the Puneet, if you are there. Yeah, just unmute yourself, Puneet, and go ahead.
Good afternoon. Good afternoon, Governor. I had hoped that Mr. Munjal will ask a question which was close to my heart. As tourism, aviation, and hotel sector does not find place in any of the speeches of any of the significant leadership for a sector that has been hurt, is absolutely the demise of the sector. One thing that came to my mind was that some of our brands, especially the one I work for, has the potential to grow global. And if we have an infrastructure of a fund like GIC or Temasek, as an example, this could be a big help, as it also happened in the case of China. So if you look at Chinese companies growing global, they also got some help. So with all this reserves we have, I think that's an opportunity, and the request is to also look at this sector, which has created 12.6% of the employment. It's the biggest multiplicator of jobs in the world, and very, very soon, in a few months, we'll come to know what impact of job losses this sector has had on the Indian economy.
Thank you. Back to you, Governor.
Thank you. I think most of the points made by the four interventions Rakesh Mittal, Vinayak Chatterjee, Sunil Munjal, and Puneet Chatwal. They're in the nature of suggestions. Now, such ideas get internally discussed in RBI from time to time and on a continuous basis. And sometimes many of these ideas or some of these ideas do come up for discussion and engagement between and the RBI. Many of these issues are, many of these issues are already under discussion, and they're all part of suggestions which you have made. I have made a note of your views. Tourism sector, which you pointed out, I think it's the most stressed sector at the moment. And in fact, in our financial stability report also, we have pointed it out that tourism and MSME sectors have been, quite substantially hit. So there's a suggestion of a fund to set it up, and again, I mean, it's again outside. We'll work. Basically the idea is that you have a stress situation, and how do you get over the problem? Now that is an issue which the government, I am sure the government is engaged. In fact, if you recall, in one of my earlier interventions, I think in another event, I had mentioned that tourism, can be a major job creator for India. Now we had, let us say in the 90s, in the late 90s, and in the first decade of the current millennium, we had sectors like IT, we had sectors like telecom, the infrastructure investment, again, emanating from the Golden Quadrilateral. They became the new sunrise sectors, and they became the major job creators. So in today's situation, once the pandemic, we are over the pandemic, and hopefully a vaccine is, comes in, and I'm sure tourism in India can become a major job creator. And I must also point out that in the last budget speech, the finance minister did mention that tourism is a priority sector for the government, which they will be giving attention to. Now, the problem of the small finance entities, which you mentioned about the payment banks, the small finance banks, or the smaller NBFCs, I think that is an issue which needs to be needs policy focus. In fact, I have therefore already we have advised the banks and the NBFCs, as you are aware, to undertake COVID stress tests and raise capital ahead of the curve, rather than waiting for rather than waiting for a situation to arise. And these are issues which we are constantly working on in RBI, and let's see what comes out of it. Thank you.
Thank you. Thank you very much, Governor. Thank you for that outstanding session. I'll request Uday to give his comments at the end.
Yeah. Thank you, Governor. One of the very important aspects of a policy maker are to be a good listener and have an open mind before taking decisions. And Governor, we genuinely believe that in you as the RBI Governor, we have a person who's a good listener, having an open mind, and is navigating India through this very crucial phase of Indian economy. And India relies on RBI's shoulders as we go forward. And I just wanted to say on behalf of CII and all our members, we understand very significant challenges across sectors, businesses, and for India. At the same time, the confidence which you have given about the positivity of building India for a new world at the same time are extremely important. We are therefore in many ways in a two-speed engine, challenges of the present and opportunities of the future. And we are very confident that with you being at the helm of RBI, we in India will make an appropriate progress on both the present and the future. And once again, thank you very much for being with us on this very important time in Indian history. Thank you, sir, and we are honored.
Thank you. Thank you very much. Thank you.
Thank you. Thank you.
Thank you.
Good luck. All the best.
Thanks. Bye-bye.
करो करो फटाफट फटाफट